Prime Minister Sir Keir Starmer has warned that the upcoming October budget will be painful, saying that those with the broader shoulders should bear the heavier burden. My name is Jack Reeves and welcome to this week's episode of Tax Tidbits, where on Monday, Keir Starmer made a speech from the Downing Street Garden in which he said the government will have to make big asks of the public in the upcoming budget and that people will have to accept short-term pain for long-term good. He again mentioned that the government have inherited a severe economic and societal black hole, describing it as worse than anticipated. He has assured that there would be no increases in national insurance, income tax and VAT as per their policy. However, the government has already begun cost-cutting measures such as withdrawing winter fuel allowances for many pensioners. We can only wait and see what else he has in store for the budget. In April, the number of new child benefit claims increased by 16% as a result of the threshold on the high income child benefit charge increasing. As we spoke about in episode 30, the threshold for when parents have to start paying back child benefit increased from £50,000 to £60,000, with it being tapered between £60,000 and £80,000. This means that you have to earn over £80,000 before child benefit is fully withdrawn. This change not only made more families eligible, but it also reminded those already eligible that they should claim it. Last week, we reported on the projected energy prices, while on Friday, Ofgem announced the latest price cap from October, and we weren't far off. Ofgem have confirmed that a typical household's annual energy bill will rise by £149 a year from October, increasing to £1,717 a year. This 10% increase has been caused by rising international energy costs, though bills are roughly £117 cheaper than in October last year for the typical household. With energy and standing charges increasing and the possibility of more price hikes in January, many people, especially those in vulnerable households, are worried about managing their bills. The cost of many takeaways has shot up in the UK over the last 5 years, most notably the cost of fish and chips, which has increased by over 50%, with the average portion now nearly £10. Chip shop owners have been dealing with rising costs from higher energy bills, tariffs on Russian seafood and poor potato harvests this year. These factors have made the classic British takeaway a lot more expensive, particularly in comparison to other takeaways. As a result, many small businesses are finding it tough to keep going. So if you're feeling like a takeaway this weekend, why not pop into your local chippy? More than 3,500 current and former employees of Next have won a significant equal pay case after a 6-year-long battle. An employment tribunal ruled that store staff were unfairly paid less than the warehouse workers at Next, despite performing similarly demanding tasks. The tribunal rejected Next's argument that pay rates for warehouse workers were higher than those for retail workers in the wider labour market, and instead found the disparity was driven by cost cutting. The back pay owed could exceed £30 million, though Next does plan to appeal the decision. Thanks for tuning into this episode of Tax Tidbits. I hope you enjoyed this week's video. Don't forget to like and subscribe for more bite-sized tax tips and updates. And if you have any questions or topics you'd like us to cover in the future, feel free to leave them in the comments below. We will see you next week.